I was once like you, staring at the charts and taking random trades and watching my account balance disappear, but then something changed. It was a late night, all the all-nighters that we do as traders, and I had just suffered my third loss in a row for that particular day. And I was asking myself, is this about the strategy? Where am I getting this wrong? Frustrated and tired of losing, hopping from strategy to strategy, and tired of chasing all the price action that made no sense. It was a devastating moment. I once told you about this particular part of the story in the previous video that I did. It was a devastating experience. Then I came across a trader in one of the forums that I was in who mentioned something about an indicator called the TDI. It was basically free and he actually offered me the indicator. At first I just thought it was another indicator gimmick, but when I finally understood how this worked, everything clicked. Basically understanding how the RSI line on the trader's dynamic index works, the signal line as well as the volatility bands. That's when the creativity changed. Instead of chasing random price action, I started trading only when the market is ready. My losses shrank and my wins became consistent. And today I'm going to teach you the exact strategy I used on that particular time. Stay with me until the end, because once you learn this, you will never enter blindly. Let's dive in. Alright, so that was a short story on how I came across this indicator and began to use it. If you are still at this part of the video, then it means you are serious about learning on this particular indicator. I want you to do yourself a favor. Take this moment and do something that actually works. I understand that a lot of us now have a very short attention span, but try to push yourself to the limits. Make sure that you understand everything that I'm about to put across for you. If you can, take some notes that you will use when you start backtesting the system. So to backtest the system, it means you have to be someone who is understanding how it works. So let's jump right in. The objective of this video is to leave you being able to take entries like this one. This is this yellow circle is actually signifying the point you could have taken on this particular chart. So this was actually a railroad track that was issued, and you could have made an entry at that particular point, and the trader's dynamic index, which is this indicator at the bottom, confirming that particular entry and your exit at this particular point. So that is what I want you to be able to do at the end of this video. Right, let's start by defining the strategy. We are going to utilize a simple concept that utilizes top-down analysis. It is a basic concept that we all hear from several parts of the trading context. Top-down analysis, which is starting on the higher time frame and going to the lower time frame. We say smaller time frames are building blocks of higher time frames, basically meaning that the 1 hour will be building something that is seen or something that is an objective on the daily time frame. Therefore, what we want to build on the higher time frame always starts at the smaller time frame. We cannot build an H1 time frame candle without 1 minute time frame candles. So with this, we are going to have the H4 as our high time frame and the M15 as our small time frame, basically like that. What is seen on H4 will be built on the M15 time frame in this particular way. All right, so the TDI representations will be basically like this. This is going to be called big shark, small shark entry. That is the name that I've actually given to this particular strategy. Big shark, small shark entry, whereby we are going to use the H4 time frame and then the M15 time frame for entries. So it's big shark and small shark entry. However, I will discuss rules of entry and give you examples right on the charts so that you will be able to comprehend. So just stick with me. So the first presentation that I'm going to show you is the H4 time frame. On the H4 time frame, these are the steps that you need to see. Step 1 being finding what we call a shark fin on the H4 time frame. I've always talked about this term several times on this channel, where we will be looking for an H4 shark fin, or basically a shark fin is something that should be common if you are my follower. Then step 2, make sure to mark that shark fin on the price chart. So for instance, you can see this yellow circle is actually marking an H4 shark fin. What is a shark fin? For the purposes of those who do not know, we can see that we have these blue bands, and when the RSI line goes outside the bands, that is when we say it's a shark fin. Basically looking like a shark that has come out of the water and then went back inside, and what we'll be seeing is a shark fin above the water surface. So basically, if we get a shark fin, we need to mark on the price chart like this. That is the second step. Then the third step is to go on M15 to locate the high and low of the M15 Asian session range. That is what we now want to see. M15 Asian session range, and then we do the following steps. All right, so conditions for entry, that is now on the M15 time frame. What we want to see is to basically mark. So in this case, we would have marked somewhere where we couldn't see it. I'll actually show you clearly on the charts. So what we want to see, as you can see, this is the high, this is the low of the Asian session range. What we want is when the H4 shark fin is on the bottom of the TDI, which is basically the bottom part of the TDI, we'll be looking for buys. When it is on the top part, we'll be looking for sales. So whenever we have something like that, we now need the M15 to sync with what we've seen on the H4 time frame. So that synchronization is where I actually came up with the word big shark, small shark entry. So when that happens, we want to make an entry when price on the M15 creates its own shark fin, and then by creating its own shark fin, we want to have it at the low of the Asian session or below the Asian session. So it is at the low of the Asian session or below the low of the Asian session, like in this particular case, and get a candlestick reversal pattern. So like in this scenario, you can see there was a bullish engulfing pattern, meaning that we were going to enter here since there was a shark fin. Shark fin on H4, shark fin on M15, low of the Asian session range or below the Asian session range is what we want to see. So let's now have examples on live charts so that we'll be able to understand this particular strategy. But before we dive in the examples, check out my free Telegram channel. I'll leave the link in the description box below so that you can be part of the community where I share free signals, setups, as well as trading advice. So basically, this is GBP against CHF. This is a template that I can provide you for free. I've given it to a lot of traders. The first step we said is to go on the H4 time frame. And on that H4 time frame, what we want is to mark a point where we had a shark fin. A shark fin was issued here. And after that shark fin was issued, the next thing is now to switch to the M15 time frame so that we can actually see the bias. So in this case, the shark fin was at the bottom. So this is where I am going to mark on the price chart. And then what I will be looking for on the M15 are now buys away from this particular point. So going on the M15 time frame, and this becomes, it goes back into history. And this is the point that we have marked on the H4 time frame. And our job is now to find the shark fins that are actually in line or synchronizing with what we have seen on the H4. We can see this is the Asian session, and after that Asian session, we can see the market going outside and then creating this shark fin. And after creating that shark fin, it is right below the Asian session range, and then our entry will be at this particular point, close, since this was a railroad track that was issued as a candlestick reversal pattern, and the market went to the upside basically like that. After that, we can see again the market went below, and after going below, there was a shark fin and there was a possible point of market entry. Here we can see as well the market went outside this range And after that, it actually created several. This is a 3-candle reversal pattern, and we could have made our entry. If this is going to be difficult to identify these candlestick reversal patterns, you can as well use an entry when the RSI line in green and the signal line in red crosses each other, and you can make an entry at that particular point, and you can see the market went to the upside, basically like that. So you need to backtest as much as you can. This strategy is never going to be 100%. This strategy is going to have some losses. No strategy under the sun has 100% accuracy. If you ever get across something like that, put some red flags. So you need to backtest, understand it, and see how you behave when you have a streak of losses whenever they come. On that note, we've come to the end of our today's video. Thank you for watching. Like and subscribe, and I'll see you in the next one.